Earlier today, Yahoo Finance spoke to noted value investor John Rogers of Ariel Investments about some of his select investments and frothiness that he's seeing in the current market. Let's take a listen to what he had to say.
Well, back then it was very similar to today. You had these really fancy, high-growth companies that were doing extraordinarily well. They were blue-chip companies that people thought were one-decision companies. They would always just go up and up because they had these strong brands. They'd been growing so readily, and people just couldn't see anything that would ever cause them to decline. But of course, they ended up having dramatic declines as people realized the stocks were vastly overpriced. And I think that's what's happening today with these FAANG stocks and these large companies that are doing so well today, these trillion-dollar market caps. It is a little bit scary.
John, it's Julie here. So we have seen this sort of shift away from value in terms of a performer pretty much over the last decade. And I know a lot of longtime value investors have said we will see a return to value. And you yourself say it should be coming in the next year. But what's really going to be the trigger and the catalyst for that, since value has not been in that pole position over the last decade or so?
Well, it's one of the things that's happening is starting to happen already. November was a great month where value started to really outperform these large cap growth stocks, which I think will continue into 2021, and we will have a really wonderful recovery for value stocks. The same way that the value stocks did so well when the internet bubble burst, near the end of the century, value just outperformed dramatically. And partly what we're seeing, what will happen, we think will happen, is my colleague Charlie Bobrinsko always talks about, inflation is going to come back. We're going to have higher interest rates. And that higher interest rate environment will help value stocks. It will really hurt these high PE stocks that can sell at such high multiples, partly because interest rates are so low. Also, the history shows that when we come out of a downturn in the economy and you have a recession ending and the economy bursts forward, often value stocks do really well in that kind of environment. And then finally, being a tried and true contrarian, we're seeing all kinds of signs. I serve on a number of investment committees. The number of times the consultants come in now and say we want to fire the value managers is just very consistent. Secondly, so many value shops are starting to close. More and more people are getting fired so often they've got to close up shop. And finally, I heard a discussion the other day where people are trying to redefine what value really means. So all these kinds of things that are happening make me highly confident that value is bottoming out and there's a massive upside for value relative to growth.
John, I always enjoy very much how you break down your thinking behind certain calls by your firm. And Ariel owns just under 10% of Madison Square Garden Entertainment. What's your thesis there?
Well, we think Madison Square Garden Entertainment is an extraordinary value. The thesis there is that eventually people will be back in the garden with the vaccines, with the masks. People will be back watching concerts this summer, watching the Knicks play, getting back engaged with that extraordinary one-of-a-kind facility in the heart of New York. Also, Madison Square Garden owns not only the garden itself, but the land around it, the air rights above it. They have the rights to Radio City Music Hall. They also own the Chicago Theater here in Chicago, and they're building this fabulous new place in Las Vegas called the Sphere, which we think is going to be a new attraction that's going to have the highest of high technology, the best audio. All performers are going to want to be there for that unique experience, which will bring in, of course, an extraordinary audience. So we think it's really well positioned for the recovery. And at the same time, they have enormous amount of cash on the balance sheet. And we think that'll help isolate them and give them a chance to have the firepower to fight another day. So that's why we really love Madison Square Garden Entertainment.
John, I trust me, I am pulling for entertainment and sports to come back. I would ask you that when it comes to MSG, all the cash in the world doesn't do you good if you're not making good decisions with it, right? So I know that they split up Madison Square Garden Entertainment and networks in order to try to unlock some value. The management, though, of MSG has come, certainly when it comes to the Knicks, it's come under some criticism. But I wonder what you think of Jim Dolan as the head of this company. Has he made the right decisions, and is he going to continue to make the right decisions coming out of this?
Well, there is a Dolan discount. There's no doubt about it. Many investors are skeptical of Jim Dolan. But if you look at his record, he has created a lot of value. He's made very good decisions that have ultimately played out very well for shareholders over time. If you think back when Madison Square Garden got sort of reinvented sort of a decade or so ago, it had a massive renovation. People were very skeptical then, but it worked out beautifully and built out an underbelly of a much stronger garden that's been much more profitable than people thought was possible. Also, as you know, Jim Dolan loves the music world. He performs himself. He's built deep relationships in the entertainment industry, which helps him to be able to attract great talent to the Garden and now to the Sphere and to other places like the Chicago Theater. So I know he's controversial, but he's always made money for shareholders over time, and I think he's really well positioned as Madison Square Garden Entertainment becomes more of an entertainment place, not just a sports place.
You know, John, another name that you're interested in, BOK Financial, regional bank down in the Southwest. They own a couple of different brands down there. I'm curious not only on what you like with BOK, but just the regional banks more broadly. We've seen a lot of enthusiasm for, the KRE index has done well. We've seen financials as a group do okay in the last couple of months. Curious for your thoughts both on the company and maybe the regional space more broadly.
Well, it's interesting. I've been getting to know the bank more and more over the last several years. We've owned the stock in a modest way, and we built up a larger position this year because we think it's well positioned, like many regional banks, to do well as interest rates go higher. Low rates have been very, very difficult on banks, especially regional banks. But at the same time, we think they're located in the right parts of the country. Energy has been under siege for a long time. Commodity stocks have underperformed. They're in a position there where they'll be able to benefit from a regional recovery as the energy markets come back stronger and stronger. And George Kaiser is a terrific chairman, someone who's had enormous influence on that bank and its culture. So it's just not an ordinary regional bank. We think it's a truly specialized one. I've had actually a chance to get to know George Kaiser because he's been part of helping to shine a light on the challenges that have happened in Tulsa. And many of you know that 100 years ago, we had the Tulsa race riots and race massacre. And they're going to be shining a light on Tulsa to be able to get past that tragedy. My great-grandfather actually owned the Stratford Hotel in Tulsa that was burned down during those riots. So I've been spending a lot of time getting to know Tulsa well and getting to know Kaiser well, George Kaiser well, and I think it's, again, a very well-positioned regional stock.
You can get a full interview with John Rogers of Ariel Investments on yahoofinance.com.